We already broke down the fundamentals, so go check that video if you haven't, because we add all the spicy sauce that we had past week, that we will have next week, and all the drama with Trump mainly. Two very separate things, one of each other, but everything adds to the market, especially if you are trading US dollar or pairs related to US dollar. So for the technical, we can see in this chart we have two very big cycles. The one is bearish, that was last year, but currently we're in a very long lasting, for now, bullish cycle that currently short term, if we go to the 15M or lower, we will have a minor retracement or bearish cycle. But as you can see, the important thing that our eyes can see very easily is that we have another triple top. After in past weeks we created another triple top in this area that also reacted very high to the downside first, and then reacted very volatile to the upside, creating this wick at the previous double top that we created pre two news releases or two rate cuts releases. As you can see in those cycles, we have very big, this is the 4 hour by the way, we have very big candles, meaning institutions and big pressure is entering the market, sending the gold price to the downside. This is not something that retails can do, so we can expect that the current cycle is something that the investors are embracing. They're doing what the trend is naturally following, that in this case is this channel. But for now, price is been respecting very well our zones. As we can see here, we have lines that we can barely see, but price is weakening out in that area. We don't set the line so price immediately reacts in that price or in that line. We select zones where price might react based in the high liquidity. So if we go to the past chart we've been analyzing, we have two major areas that will be this yellow box and the orange one. So we created first this cycle that pretty much lasted some days, that was replicating the price past action of December. So then we ranged and created the triple top at this price that was 26.64. Then we wicked out multiple times to just range below until we got major news. Past week was very negative for the dollar, and also we've been having external factors that we already covered some of them in the past videos. So let's just focus in the price action. As you can see, every bad news for price went straight for our zones. First we retested here with a very big candle and at the same time a very big wick, this area that we had marked as high liquidity or point of interest, because price only retested one time and pretty much dumped or went opposite for the traders that got caught. This is a price with a lot of interest or liquidity. So as we can see, we reacted very aggressive to that area, rejecting in the same session or in the same 4-hour candle in this situation. Then we retested, and after again more news and NFP and a combination of more factors, we managed to break this zone and created a new triple top higher, because here we have the NFP manipulation and wick. It seemed that we were recovering the move in both of those wicks, but at the same time price was very bullish, and people at this point seeing a reduction in bonds and all the policies that might take action when Trump enters the markets, the TikTok situation. Tons of factors are pricing in the market, and as you can see, this trend suggests high bullish pressure. This is a $64 move to the upside. We have the NFP reaction that we cannot consider it as a retracement, is mainly a manipulation, so price could do its own thing. So the last week was mainly bullish. We closed bearish. We had a cycle at the end of the week but pretty much we were pushing all week since market open last week, and this retracement can be just a very healthy one, so we can push again in this area that is creating currently a very high resistance. So it's natural that price can go to this area and retest again. So if we are remaining above this orange, we could say it's not anymore a high liquidity area, but we still remain with all orders maybe from traders not closing. So if we remain above, we will have this area as the target. If we remain below and we are managing to have a range, below this point, we could say that the range is the orange box, so all this zone, because until we don't range in either to the upside or to the downside, we will remain bullish to break the 2720 area. So only the next week's appointment of Trump and maybe the only news that we will have that are on Thursday or start on Thursday, that is unemployment, can push price, if not to do something new. But if not, I will feel that the retracement will continue until we get to our new liquidity support. We could add that is a support now, and if no news and the economy remains same, we might break this triple top. But if news change, we might go to the, because there's still tons of liquidity in these 2 points that at any given chance market will go there like a magnet. So it's a very interesting point to start chasing opportunities, but jet is a very middle point. It's not the best timing to enter. So just take that in mind and keep your levels well marked. Know where you are at the market. Currently, we can see a bearish retracement, but overall, the trend since December 18 is being bullish because we haven't broke a structure maybe in the 19, and we could argue in the 30, but it's still bullish. So consider the strength of the gold by now.